Well, first of all, it is 65% that is being put in the market. The government will retain 35%. Out of that 65%, 20% goes to individual Kenyans, 20% goes to Kenyan firms. Kenya Pipeline employees get an allocation of 5% should they choose to take it. East African community investors, 20%. Oil marketers, 15%. And then foreign investors, 20%. So this basically just means that a majority of it, that 60% of this new allocation is earmarked to be for Kenyan investors, whether it's Kenyan retail, Kenyan corporate, or Kenyan workers of the company, plus the oil marketing companies in the country. To break this down further and just to understand why pipeline, why now, then what's this process of participating in this IPO if one wishes to? What would be the benefit of it if one wanted to? Johnson Nderi, who is an investment banker, joins us. Johnson, good morning.
Good morning.
Thank you very much for joining us this morning.
Pleasure.
As we begin this conversation, you know the drill. I know you're a fixer. Jano will give you the day's quote.
I feel like they should all be given a heads up when they're being alerted. By the way, before you start, there's a quote. Today's quote is by somebody called Amilcar Cabral, who was one of Africa's leading anti-colonial thinkers, and really one of those people who led the revolution to dismantle colonialism in Africa. He once said, "Do not confuse the reality you live in with the ideas you have in your head." Do not confuse the reality you live in with the ideas you have in your head. What comes to mind when you hear that?
So generally speaking, I think it's true even now. There's the ideals where you're pursuing versus what is sort of possible, I guess, at that time. There's where you are and where you ought to be, and I think you for some people where they are is where they think everybody ought to be, but it's not necessarily the case.
Yeah, and even in all that, it doesn't mean you shouldn't aspire to be somewhere, but live within the reality of what's happening around you. That's good. Yeah.
All right, Johnson, let's get into the basics of an IPO. Essentially, what is that?
An IPO means initial public offering. It's the first time a company is offering its shares to the general public, usually followed by a listing. So generally, that's what it means.
Okay. And Kenya Pipeline Company is issuing an IPO. This is in the mood or whatever, in line with privatization, right? So what this means that as Mariam, I can now buy shares at Kenya Pipeline.
Yes, you can. So like Eric was detailing earlier, if you're a Kenya retailer, there's 20% allocated for you. If you're an institutional investor, there's 20% allocated for you. If you're an employee, there's 5% it's been set aside for you, and so on and so forth.
Okay. I wanted to get into the valuation. What does Kenya Pipeline Company do? And why would it be of value or of interest to me as a retail shareholder, as an as a group, whichever it is?
So Kenya Pipeline has been mandated to transport through pipeline energy, primarily petroleum, going into LPG now. There are plans for LNG as well.
What's LNG?
So LPG is liquefied petroleum gas, and LNG is liquefied natural gas. LPG is, I think, primarily butane and propane, and LNG is primarily, I think, methane.
Ile gas kwa cylinder.
No, in simple terms.
Yeah. Some countries do primarily methane. We do butane and propane. Butane and propane are also flammable gases, heavy gases. They can be dangerous because of that. When gas leaks in your house, if you lit a match, it could explode because it just stays there.
Right.
LNG is it diffuses less dangerous.
Okay.
So many countries prefer LNG to LPG.
This is an absolutely useless fact. But I learned that methane, the gas itself, is odorless. So it's an additive that's usually added so that when there's a leak, you can smell it. Otherwise, the gas itself is odorless. And someone saw how dangerous that would be, and they were like,
it's not a useless fact. I think a lot of people need to know that. Have you answered the why now question? Like, why now? Why do you think, why now? Why is it going live now? Why is it something that they want to do now? Does it make sense?
So the company is not raising any funds. It's a government that is selling shares. So trying to put a little money in its pockets because of the position it is in. If you've been following the government's fiscal position, you'll know, this is a necessity for them.
Yeah, and I know that's something we'll get into. Is there a way to know whether an IPO's price reflects fair value? If I'm interested. Sidebar. Or whether it's discounted. Is there a way the public can know?
So you're asking whether the valuation is appropriate.
And how it's arrived at.
Well, they said they used relative market valuation. So there are three primary valuation approaches guys use. You can use intrinsic value, where you are saying the value of the company is determined by the benefits that accrue to investors. Or you could use relative valuation, where you are saying because Nani sold his shamba at this price, even my shamba is this price. Okay. And then there's cost-based, where you're saying I've invested so much, and I believe that's a value then of the asset. So these guys went with a relative valuation.
Interesting. There's no room for like combining a few of these?
You can. In fact, best practice suggests you should use at least two, potentially three. And then, of course, you have to give rationale why you went one route rather than the other. My suspicion is this is the route that generates the highest valuation for the offer.
But relative valuation is like you want to sell a piece of land and you're just going by shambas pandei Kawangware sai 50 by 100 is 22 million. Ikishuka sana 18 million. That's what you go with.
Yes.
Basically, it's just just touching. It's based on nothing tangible.
You can't say that because if your neighbor sold at 22, why isn't yours at 22?
That's tangible.
But how did they arrive at their 22? It was it was demand driven then.
So when you hear them talking about relative valuation, you probably either took global examples, because it's not many countries where you have multiple pipelines running through, and then all of them are listed. So you have to either work with Africa or you work with global and see, okay, so in the US, how much does a pipeline?
Does a pipeline company go for?
Europe, you don't have a big sample
size.
But then again, it has its own problems. Why are you importing? You have to justify all that.
I can see the questions. If it was relative valuation, right? Because then it would be, who are your peers, essentially, right? Who is your benchmark? Is it other pipeline companies in Africa? Then what speaks to the value of those pipeline companies? Is it the amount of gas and oil going through them? Is it the physical infrastructure itself? Is it also maybe the cost of the land? Do you call it way leave? The way leaves? Or is it all of those? And then now how do you copy paste onto Kenya? So I can see the issues there. But in your assessment, 9 shillings per share and this valuation of how many billions? Is it a fair valuation of Kenya Pipeline?
So if I was to go by intrinsic value, again, it depends largely on what the strategy is, because really the valuation is based, ideally it ought to be based on the strategy. And you're not going there as a strategic buyer. You're not going to drive strategy. You're not going to drive revenues and therefore and profits. So you're passive, right, in terms of management.
Right.
So the strategy that is set there by government is what will drive. So that's where in terms of future benefits, that's where you'll be looking at. And historically, yes, they've got their strategy, what they need to do, but I mean they've been generating 7% return on equity, right? 7% return on equity, and then when you look at it from a price to book value, where you're saying what is the price, the valuation versus shareholder value. Rather shareholder funds as carried by the balance sheet. So that multiple works out to be above 1, right? So the question is, does a company
You got a bit technical for me. Go back.
So the question is, does a company of that level of profitability support that kind of a premium? Because you've got companies with high profitability in the stock market that are trading at a discount on their book value.
Okay. So 7% per annum on average, right?
Right.
When you companies that give about the same on average, what's their share price?
They'll be trading at. Talking about the valuation multiple there. Ideally, ought to be because the cost of capital will be north of 20%. So if you're delivering 7 and you're supposed to be delivering 20, then you should be. That's a fraction, right? Right. It's 7 over 20.
Yeah.
If it was doing 25, then you can see where the premium will come from. But this is trading at a discount. Let me quickly add that it is interesting. I was just looking at the balance sheet. It has about 98 billion shillings worth of shareholder capital. What that means is that, and it's got, I think, 139 billion in assets. So most of the companies equity funded. Being a company where you've sort of like monopoly, you can actually take a lot more debt, and therefore it has significant debt carrying capacity. That's one positive thing. I think this company can double its balance sheet if it wanted to. That means taking an additional 50 to 100 billion in debt and just invest. So that's the opportunity right there. But the question is, does the does the strategy speak to that?
I want to come into the political side of the decisions that have brought us here, right? So Kenya Pipeline, like you said, it's a monopoly. It's the only one that transports via pipeline all our oil products from Kipevu on the coast, bringing them inland.
Yeah.
It's been expected to be the one that develops the pipeline on Lapset. That takes from going all the way. If South Sudan was seeking, to get access to a port,
right?
Kenya Pipeline would be involved in building a pipeline for South Sudanese oil to go to the port, or the Uganda oil to go to the port, right, and so on. But also even expanding the capacity of us transporting oil to our neighboring countries. So it's a strategic in terms of it has the potential for growth.
Yeah.
And it's been fully owned by government.
Yes.
Despite its various changes in management and board, it has sometimes generated a good return. It has sometimes not generated a good return to the government. But lately, good money coming in terms of dividends to the government. Yeah. So it's a cash cow for government. Could be a cup of milk, but it's a cup, right? It's a cow that is producing milk.
Yes, but it's still generating
well below capacity.
Yeah, not just below capacity, below cost of capital. So if you assume capital as a cost, where will you deploy it, right? Because this capital is costing you something. So 7% is too low. It needs to generate a lot more. So, I mean, if the government were an investor, it'll be underperforming on this specific
company and returns.
But it's still generating a return,
Okay.
but not where it's supposed to be.
So from your professional point, is it a good idea for government to cede the 65% to other investors, which also brings in other people and other voices onto the board of Kenya Pipeline and steering the management of Kenya Pipeline?
Right.
So ideologically, I'm always on the side of privatize. I don't believe government should be in the business of business at all.
Okay.
And it's simple. I mean, this country, we have the capacity to do multiple pipelines and pursue different. Yes, it's sort of a monopoly to Kenya, but remember, it generated about in 2024 50% of its revenues from regional. So regionally, it's not really a monopoly. It's competing now with the Tanzania-Uganda pipeline, right? And if you're looking at the region as a market, then you've got potentially Ethiopia, like you say, South Sudan. And can you serve Burundi better? Can you serve Rwanda better? Can you serve Uganda better with a different pipeline? So when it's privatized like this, it gives up room for now competition.
Yeah.
We're looking at it as a strategic asset because we are saying it's the only one, but in an alternate reality, it doesn't need to be the only one.
It doesn't need to be the only one. But now I'm thinking...
Answer the question.
So,
So, okay, well, ideologically, you'd like government to sell everything.
So there are
But
two things.
logically...
Two things. So on the company side, now the balance sheet and the financials be published. So there'll be a little bit more transparency. We'll be able to see what's going on inside the company, and that's, I think, a good thing. But on the government side, it needs to manage its money. I know the money is going to a infrastructure fund. Is it really?
Is the question. They say that, but they say it's ring fenced.
But it's going to the government's pocket. I think ideally it ought to go to pay down some of the debt. But
our national debt, you mean?
Yeah, but
Okay.
it's going down to
Infrastructure, future.
Quick question. Okay. You've talked about, accountability mechanisms, a lot more transparency as far as what's happening internally at Kenya Pipeline. Once it goes public, yes, a publicly listed company undergoes a lot more scrutiny.
Yes.
There's the other side, which is investors will want their money back. They will want to make a profit. Essentially, I'm not doing this for funsies or out of the goodness of my heart. I want to make money off of this. So we may see people plow in investors, institutional investors, etc., and they'll want
pensions.
pensions, right? And they will want to see a return on that, which then speaks to the pricing stability of our oil and gas, which to me sounds like now another a critical national
discussion.
Discussion. Walk me through, because I can see how as an investment banker, you're just like, sell the whole thing. But I'm thinking long term for our stability in oil and gas pricing, is this the best idea?
But ultimately business is supposed to generate value. You're not just doing it there. I mean, the revenues are supposed to be as a result of you generating value for society. So, and that's the problem I have when government does business, is they assume they're generating value, and then when the market does not support the investment, they tax you to support it. Right? So when it's out there, you can see whether it's generating value or not, and for society, and therefore does it even justify its existence?
Okay, that is looking at Kenya Pipeline Company as a business, as a strategic national asset. I think
Explain maybe
that's
further, Mario.
Yeah, I mean,
Take us to that future where the country's strategic interests are at play.
Are in trouble. I'm thinking through, again, the cost of already we struggle with the cost of fuel, right?
Yes.
And that ripple effect into everything in the economy.
Right.
So a few years on, again, investors will put in money and want to see some come back. That goes into the cost of energy. That then goes into the economy as a whole, right?
Right.
So as investors are plowing back and getting their return on investment, the nation as a whole is having to pay more for fuel,
Right.
right? And that to me is problematic. And there's also, I don't know, 65% of these shares are reserved for Kenyans. That's okay. But you could also have big foreign investors who do have quite a large shareholding, who then also now speak to how Kenya Pipeline is run. And I think Kenya oil and gas is matters of national interest, not just business. So sometimes it's okay to take off the profitability angle, just that lens, just a little bit, and look at it from a broader perspective.
But you can do that after the break. But is this worst case scenario? Are you seeing it sort of?
It's not even. I don't know. It's not worst case scenario. I think for sure.
It's a definite case scenario.
It's not definite. It's
It's a
almost
maybe
a
case.
definite because again,
It's
no
a
one is
possible
going to
outcome.
invest here just for fun,
Okay.
right? You want to see your money come back.
Okay.
Okay. Hold the thought.
As we go into the break, Mariam, think about regulation of pricing.
Okay.
Okay.
Oh, okay. I was
It's
Ndani then. All right,
going to the break.
we're going to the break.
Yes.
We're with Johnson Nderi. He's an investment banker, unpacking the Kenya Pipeline IPO. That's the conversation we're having. Somebody on YouTube is so funny. At among KPC products, do you have anointing oil? Let's come back after the break. It's coming up to 7:30, but a few of you are asking some pretty good questions. We'll try and answer them in just a moment.
Some feedback.
Yeah, let's get into some. I like when you say involve us. It all just goes to involve me. That's where my
Involve
mind
me.
goes.
Involve
Charles Ndungu has said, there it is. He just said profits first. The rest comes later. Investment banks will be interested in profits, not looking at the results to Kenyans as a society. Okay, that's one way to look at it. Sami says, but Kenya Pipeline is a transporter, does not import the fuel. The cost of fuel is determined by the purchases. Anthony Mbogwa, methinks the ongoing sale of Safaricom shares and now pipeline is just to raise money to treasury so it can be easily accessed by others. Why is the government selling key assets? This comes up all the time, no matter how much it's explained.
Yeah.
And I know one of the things I want to figure out is whether it actually improves our debt position really meaningfully, but we'll come to that in a bit. Wasn't the sale suspended by court? That's also what Daniel Kimani is asking. So just a few reflections there. We'll see what lands with you as you maybe go into addressing Mariam's question from before the break.
Right. Yeah, it was just simply on the Kenya Pipeline Company as a strategic asset, what that means for our economy, for our stability, not just as a nation, but in the region. Essentially, if you do have foreign investors, even if it's only 20%, or whatever, foreign investors have some level of control over something as strategic as oil, and then even local investors will want to get back some profit after a while. That cost comes down to consumers. Again, price of energy is pegged to the price of everything. So is this a good idea?
I still think it is. Once upon a time, and we were discussing off camera, Kenya Post and Telecommunication was considered a strategic asset. Nobody even thinks that anymore. And you're right. This is just the allocation policy, the 20%. After trading, it could be anything, right? And I think we lifted the cap on how much a foreign investor could hold here. For me, that's not really too much of an issue. I think every 3 years, everybody in energy sector needs to submit a strategy. I think 3-year strategy of how, what the business is going to look like 3 years hence, just to allow for, I think, EPRA and the government to plan. Our energy sector is, except for KenGen, so you've got guys like Total, Vivo, which are international companies anyway. So and they've been serving you guys for the longest time. So I mean, Singapore, one of the biggest bets they made was on foreign direct investments. So I mean, if you don't have the savings to do what you need to do, it's not a bad idea to get other people's savings to come generate value for you, despite what I've been accused of. Profits actually suggest you've created a lot of value.
Value for your shareholders. That's the catch. You've created value for your shareholders, which is not a bad thing.
Not really. For you to sell, you must have created value.
Yes.
For your market as well.
For your market as well.
Because
that's true.
It's also when I'm buying something, I'm buying value, right? Going to the customer as a customer, I'm buying value. So as a business person, I have to, and that's one of the things we look at when you're looking at the business case of companies. Do you create value for society? That's the surest bet for future profits. If you have that philosophy that you're going out there to create value, then I know I'm safe with you. But if you're trying to extract value, if your pricing is just basically, I don't know how to put it, but not anchored to value, then becomes problematic. That's a very short term. That's a deal.
Yeah.
That's not an investment.
It's a deal. Okay.
How does privatization guarantee longevity of a company and long-term profitability of a company, and also now value to the customers, value to shareholders, value to strategic interests of the country? I want to take you to in the mid-90s, the second half of the 90s, and the Kenya Airways IPO. Went to the market. Kenya Airways is not a private company, but look at where Kenya Airways is today, despite it being a privatized entity.
Right.
Would we say it's because of its shareholding and its directors, or would you say it's because of its government level of interest in Kenya Airways that could have contributed to the turmoil that's within Kenya Airways?
So two things. Number one, privatization is not supposed to guarantee value creation. What it's supposed to do is, because government becomes a player rather than a referee. When you privatize, government now maintains as a referee and, leaves the field for people to play, right? So ideally, for something like a privatization of KQ, what ought to have happened was then, there's privatization, then there's, when you lead... When everybody's allowed to, when everybody's allowed to come and play, forget the word.
Okay.
It usually goes together with privatization. Liberalization. There was no liberalization. So it was maintained as a monopoly. So when you privatize, you take away government balance sheet and taxpayer obligations. But we seem to have gone back. But with KQ specifically, remember, the one entity that has been throughout, it's, because when something is struggling, you see who the ownership is. The ownership will tell you where the problem is. There's only been one entity that has been consistently owning.
A strategic investor.
Yes.
Strategic investor.
That's where the problem is.
But I know you have a question. Sorry, but just before you move on from KQ, it prompted me to think about something, which is often that even in the cases of privatization, but where government still maintains some interest or is playing referee, if things go south, then bailouts happen, again at taxpayers' expense. Is that a possibility for KPC? We're just looking at government bailing out Kenya Portland, or not bailing out, but basically giving them a 4-year reprieve on a loan repayment from a bailout.
Bailed them out,
a bailout, yes, of 1.94 billion.
Yeah, so government is known to make bad investments, bad decisions, and the problem.
You are an investment banker
Johnson,
to the core.
He is a libertarian. He's not just.
The problem.
He's like, governments make bad investments.
He's anti-government.
No, okay, let me put it this way.
He is a libertarian.
Investors generally make bad. There's no investor that doesn't make bad investments. The problem with government is that when they make bad investments, they reinforce it.
Never had it put that way. To reinforce a bad investment.
If I make a bad investment, it will die in
the market will punish you.
Yes.
Yeah.
The business will die and I'll suffer a loss.
Yeah.
Government does not suffer losses. They tax you more.
Yeah.
Oh my. Okay. One of the follow-up questions, I don't know if it's related to that. I was just thinking, so if this underperforms, who absorbs the cost? But I think that's what you've answered.
Yeah.
Yeah.
Yeah?
Yeah. So
It's taxpayers.
It's taxpayers who absorb the cost.
So they'll even, government borrows at what? 7, 8, 10%. 7 at short term, maybe 14, 15, 12, 13% long term. They're happy to borrow at that 12% and lend this underperforming guy at 2% or 3%, essentially taking losses.
Right.
and that's going to be paid by taxpayers, right? So that's a problem with government involved in business. When they make mistakes, they reinforce. There's no limit to the losses you can suffer.
There's two questions. One is, again, going back to government. One is going back to somebody who is saying, I think this is a good idea for Kenyans to have a stake in public-owned companies. Sasa, where can I go buy my stake? So, yeah, what I was going to ask is just taking people through what it looks like to buy stake. But going back to what I said earlier, I feel like this thing for easing fiscal pressure, ring fencing, does it really meaningfully improve our debt position?
So the way the transaction has been structured end to end doesn't seem like it will, because it's being taken towards infrastructure, if we are to believe what we're being told. But remember, this is the government looking to raise about 100 B. Government usually spends about 200 B a month. So, I mean, if you can use some of that to pay some of the debt, yeah.
Makes sense, maybe here and there.
Or use it not to pay debt, and also not, so you have money to. Right now we are paying debt. We have no money to buy a shoe.
Yeah.
Uko na school fees unalipa, mtoto anaenda shule, hauna pesa ya kununua kiatu because pesa yako yote unalipa kwa mtu wa duka.
Yeah. So my
But
issue,
Eric, hata pesa ya school fees hakuna.
Yes.
Yeah.
Now maybe this gives us some pesa ya school fees.
but this is why, because even before when you came to Safaricom, wasn't that part of it? My issue is just that, does it meaningfully improve our debt position? Because I think I see that big. Maybe I'm not seeing it as easing into what it can do to meaningfully improve our debt position. But I'm like, you're taking this to address that, which we don't even think. We don't know that you will.
However, though,
Yeah.
is that the reason?
It's one of the reasons.
No, this is the reason. The reason is to do infrastructure.
Yeah,
So,
not
'cause this
for debt repayment.
Yeah. It's just that what will, I mean, it's a scenario, right? If they succeed in courts in arguing that the infrastructure fund is unconstitutional, then it reverts to consolidated fund.
Yeah.
First charge on consolidated fund is debt.
So it'll go. So if the current court, because there's an ongoing case in court challenging the legality of the infrastructure fund, right? So
Has something just gone ding? You've
Yeah.
been hit by the scenarios.
You know,
Yeah.
I think there's a lot of brilliant legal minds in government. Every time something comes up and then is challenged in court, I always ask myself, you're telling me no one could have foreseen this, that this would be challenged? So then now, when we clock that if the infrastructure fund is declared unconstitutional, it's back to consolidated fund, first charge in consolidated fund is debt. I'm like, 1 + 1 is actually 2.
The math is math.
The math is math.
And not in a good way.
Not in a good way.
Again, going back to just people who are interested in this, like, what's his name? Ben
how
Chakada.
to participate
Yeah,
in the
how
IPO.
to participate in the IPO.
Right.
Yeah, take people through that.
Well, so it's an IPO. All stockbrokers will be involved as agents. So you should be able to apply through your stockbroker. I suspect the stock brokerage community will enlist the banking community. That's what we did when we were doing Safaricom. I was at Sontra and we had like 10 or so banks we were working with. We had quite a number of circles, Stima Circle, can't remember all of them, Kenya Bankers Circle. So, I mean, there's USSD, I saw on this one as well. So if you, when the information memorandum is out, it'll tell you how you can apply for the shares, yes.
But there's a minimum number of shares you can buy.
Of course.
It's 9 bob. You see at you and got a shilling 10.
Nipe share moja.
Moja na
No, no,
socha.
Doesn't work that way.
No, there'll be time for buying 1 unit. But yeah, there's a minimum.
Okay, so just take us through again, because there are many people who have not been through an IPO recently.
Right.
So this is an IPO, and you want to participate in it.
Right.
Once you've bought your shares, then what?
It's like my friend.
I'm going to my stockbroker, fine, I've spent X number, I've bought some 1,000 shares.
Right.
All right.
So the way to look at it is like the same way a trader will look at his cabbages. Umenunua sasa hiyo ni stock. So it's also called stocks, right? So umenunua stock, so unangoja bei ipande, and then you can wait for the dividends. It's been paying healthy dividends historically. I think in 2024 they did 7 billion, if I remember correctly. Yeah, so they're going to be 18 billion shares. So you have a sizable portion.
That's way. So you can use your savings. It's not super risky.
The value of savings is in investment. If you leave it as cash or near cash, it will be eroded by inflation. So this is one of the, because the assets in the business are healthy. This is one of the inflation, shall I say, hedges against inflation. Yeah.
You know what happened? Sorry, Mariam, just a quick one. In the previous IPOs, when we had a flurry of IPOs, Kengen, Safaricom, Mumias, people were going to borrow, so they get money to purchase the shares. How would you advise for or against this? I mean, somebody who's just looking at it and says, I need 100K. Can I go to my SACCO, borrow at 12% per annum, put in the pipeline IPO, or go to a bank, or go to a Shylock, or go to anyone who's giving me a 20% interest rate?
Don't go short to a Shylock. Remember, this business, I mean, in its ideal scenario is 2024, I think, generated 7% ROE. If you borrow anything more than 7%, you're taking a very risky bet. In fact, don't borrow at all. Leave borrowing to professional investors who know what they're doing. Invest your savings.
Okay. Market inasemaje about this IPO? How is the market feeling? Kwa streets huko, kwa ground yenu ya NSE, kuna soundaje? Excitement?
Of course, it's the talk of town. It's the talk of town. I mean, that's what everybody is focusing on. It's taking the shine out of what is the stock market is doing right now, and everybody's asking, shall I take a position or not? I think if you're a long-term investor, it's not a bad idea actually. It's actually good. And I still go back to the debt carrying capacity. I think this company can double its balance sheet. Essentially, I'm saying it can put a pipeline, maybe even to Addis.
Yeah.
Or so that's a possibility. We'll see. So maybe it has good long-term prospects.
Yeah.
But you alluded to something earlier, being a strategic asset or being in the energy sector, its prices are controlled. When you go down to fuel, you look at there's a entry there, the price of fuel, there's a entry there for how much KPLC is supposed to earn. So it diminishes its ability to
be aggressive,
to trade freely, like to
confront the market
demands, right?
Yeah.
Okay.
So there's that, but I think there's good opportunity there.
Okay.
If it's run commercially.
If it's run commercially.
Yes.
That's okay. So then, I was going to ask actually, what happens to the board, essentially now the day-to-day runnings with this IPO? What changes as far as that is concerned?
I wish they'd done it, they'd structured it like KPLC board, where you participate. I mean, as a shareholder, you get to have a say in who's becoming your board, right? Because in KPLC, like the institutional government, because government has, say, 51%, then it's limited to a certain number in the board. But even with 35%, you see, government can really run things. I think in KCB, it's good 20% or thereabouts. It sort of like runs things, right? That's a corporate governance question. I think there should be a little bit of work done in that regard. Maybe this can be addressed in the privatization laws, that just to protect the minorities.
Yeah.
Or even majority investor.
It's a good point.
Whomever.
Yeah. From government, right?
Right.
They should have their say in the board. But I think the most important thing is that there'll be publications, half year. We will be getting financial reports, thick booklets packed with a lot of information. We'll
A
be
little full page in the dailies giving you the half year, full year, Sindio.
Right, and then management engaging media because they have announced this or that or the other, and guys want to know what this means or that means. Engagement with investors regularly. I like that it's 65% being offered
Local.
Yeah, which is good. Does it set a precedent for the sale of other state-owned assets? Is that a good direction? Is it something that citizens are like,
I think the precedent was set by Kibaki.
But it's been like 20 years since.
I think that's right. I knew like it's already been set, but I don't know why I feel like this is a
Can
new
you call
wave.
it a precedent if it happened 20 years
if it
ago?
happened years ago.
Yeah. So well. Good question. So if you look at how Kibaki 1.0 balanced the budget, privatization was a big part of it. We sold Telcom, we sold Kengen, Kenya Re. I can't remember if there's any other one. So that really helped in balancing government books and allowed government to do some of the things it needed to do. So this precedent from fiscal side, maybe not precedent, but maybe that's how things ought to run. But also the idea of privatization, allowing people to participate, allowing the companies to come to the market, and therefore positioning themselves to raise future funding is also a good thing. Because it should, I think the largest private bond was issued by Kengen. It was fantastic, and they were able to do quite a bit with that investment. I think we owe a lot of the investments in the geothermal to that.
I was going to say, Kengen, I think, would be a great poster child if you wanted to sell privatization, right? Amongst many others. Just last one on what this does for the stock exchange, the Nairobi Boers. What does Kenya Pipeline do? What does this IPO mean for the NSC as a whole?
I like that. As you're talking about, I think 18 billion shares, 11 billion free float. That's fantastic. I think for Safaricom it's a little lower than, I think free float for Safaricom is about 25%.
What is free?
25%. I mean that's what is not owned by the strategic investors. That's what is allowed to trade in the market, right? Because the strategic investors, they're holding it for
long term,
Yeah. So it's good. What that means is that then foreign investors now have a sizable, because when they're coming, when Franklin Templeton is coming to invest in Kenya, they look at most of our companies and say, we can buy with one trade, we can buy this one, we can buy this one. Maybe not so big because they're not interested in owning. Them they just want to take a trading position. The likes of Kenya Pipeline affords them that. And therefore now Kenya becomes an attractive investment destination.
Looking at how the market has been behaving lately, like we saw the private bonds that were issued, EABL, Safaricom, and we were seeing a lot of money, even the government coming into the market seeking to borrow with the bonds.
Right.
There's a lot of money actually that's coming in.
Right.
What does that mean? Does that mean that Kenyans actually have so much cash that they're just looking for somewhere to put?
There's a bit of cash. I think with money market funds alone, we've clocked 700 billion. Pension funds, I think last time I remember, and that was a while back, Gen Africa had more than 300 billion, and SSF another maybe 300, 400 billion. So, I mean, all this money is available. So look at the banking sector, the insurance sector, pension sector, and then now the pooled investments. There's quite a bit of money. And and I like the development now that you're having with in the fund management space, where you're having a lot more institutional investors raising money from Kenya to invest. And what that means is that it's generating a channel where entrepreneurs can now seek funding. Safaricom and Yabiel have shown us the way. We hope there'll be more coming to the market and raising long-term stable funding, because we've got this tendency to think that banks are the solution for funding for everybody. Banks are funded by deposits. That's very unstable funding. It's not good for long-term investment. So this debt funds, multi-strategy asset funds that are coming in are able to mobilize funding for entrepreneurs, and then we have a more stable economy going forward.
Okay. Let's finish off with some comments from YouTube. Looking at Abdi Osman is asking, can a rug pull happen?
And what's that?
Yeah, and what it is.
I mean, risk. That's a question of risk.
Explain what a rug pull is first.
I honestly don't know what he means by that. But my sense is that he's saying that you know.
Someone pulls the rug right from under you.
Yeah.
So I'm thinking,
what scenario would that look like?
Who would be the rug puller, or what would be the rug pull in this scenario? In this scenario.
So government still maintains a lot of say in how the business will be run. But then again, now the question is, do you trust the person you're getting into bed with, right? That's a risk of investing.
Right.
Any investment you make today, even with your friends, they can quote unquote pull the rug from
under you.
you.
You can be Jasmine and Aladdin, and then the rug disappears. Charles Ndungu, as we close, is saying, I'm not saying anything on buying during an IPO. Sit back and watch, then strike at the appropriate time. MN8645 said, I'd short it if there's an opportunity. What do you see? He also says, looking at the ROE versus the conservative cost, using their own projections, the ROE will grow to 13% by 2030. That's too expensive for me. You had alluded to those numbers.
Yeah.
But I think someone else says they think the IPO is a good idea, etc., etc.
Yeah.
Someone else is alluding to Mumias, but wacha tufunge conversation hapo.
Thank you though for shedding light. I'm gonna inspiration Mali, but maybe I need to rewatch this to make sure. So that's been Johnson Nderi, investment banker, talking about unpacking the Kenya pipeline IPO. In the next hour, somebody that we like to call her, the most litigious doctor in Kenya, Dr. Magare Gikenyi, doctor and activist, the petition over hiring of private lawyers. He'll come and talk to us about that. It's coming up to 8 a.m.